Imagine a man who, in an era of economic uncertainty, takes a software company and turns it into one of the largest digital vaults on the planet. 628,946 Bitcoin. Almost $76 billion. About 3% of the world's total BTC supply. This is not the story of an exchange, nor of a crypto startup. It is the story of Michael Saylor, an engineer, an entrepreneur, a visionary, and for some, a high-stakes gambler. Today, we retrace his journey from the military bases where he grew up to the boardrooms of a NASDAQ-listed multinational, all the way to the tweets that shake Wall Street. Michael J. Saylor was born in 1965 in Lincoln, Nebraska. His father was a U.S. Air Force pilot, and the family moved frequently. As a boy, he learned the value of adaptability, discipline, and meticulous planning. When he entered the Massachusetts Institute of Technology, he didn't choose a single path. He studied aerospace engineering, but also the history of science, technology and vision, calculation, and philosophy. In 1989, together with colleague Sanju Bansal, he founded MicroStrategy, a company specializing in business intelligence, software that helps other businesses interpret data. The 1990s were golden years. The stock market rewarded tech pioneers, and MicroStrategy's growth was meteoric. In 1998, the company went public on the NASDAQ. By 2000, its stock price had soared past $300. Saylor was a billionaire, and MicroStrategy seemed unstoppable. Then, the crash. March 2000, the SEC accused the company of inflating its financial results. The stock plunged 62% in a single day. On paper, Saylor lost billions. And yet he stayed. He didn't run. He cut his own salary to $1 a year, reorganized the company, and quietly went back to building, far from the spotlight. Two decades later, the world faced a new crisis, the COVID-19 pandemic. Governments printed money at unprecedented rates. Interest rates dropped to zero. Companies found themselves sitting on mountains of cash that lost value with each passing day. In 2020, MicroStrategy held over $500 million in cash. For Saylor, keeping that money in US dollars was like watching sand slip through his fingers. It was at this moment that he rediscovered Bitcoin. He studied it obsessively, hours of podcasts, white papers, interviews. His conclusion: it was digital gold, a scarce asset, resistant to censorship and impossible to inflate. In August 2020, he announced the first purchase, $250 million in BTC. And it was only the beginning. Saylor understood that he couldn't stop, but buying more Bitcoin required massive amounts of capital. The solution? Financial leverage. MicroStrategy began issuing convertible bonds and new shares, channeling the proceeds directly into additional BTC purchases. It became a relentless cycle. Raise funds at low interest rates, buy Bitcoin, boost the company's value, attract new investors, raise even more funds, and repeat. Within just a few years, MicroStrategy had become a one-of-a-kind phenomenon, a software company that was, in effect, an unregulated Bitcoin ETF. The market noticed. MSTR shares started to move in near-perfect sync with the price of BTC. August 2025. Strategy. The new name adopted that year holds a Bitcoin reserve of 628,946 BTC. Value: nearly $76 billion. In the last quarter alone, the company purchased another 155 BTC, spending $18 million at an average price of $116,401. The Bitcoin yield for quarter 2025 came in at 25%, with estimated gains of $13 billion. The stated goal? A 30% annual BTC return and $20 billion in profits. Numbers that, for many, sound like science fiction, but for Saylor, are simply the result of a calculated mathematical strategy.
Not everyone is willing to applaud Michael Saylor.
For some, his empire is not a masterpiece of strategy, but a house of cards built on a fickle asset. James Chanos, a Wall Street legend and relentless short seller, dismissed it with two words: financial gibberish, a financial language that, in his view, only works as long as Bitcoin keeps rising. More conservative economists, such as Nouriel Roubini, warn too much leverage, too much exposure to an asset with no fundamentals. To them, the strategy model is like racing in Formula One without brakes. Even voices within traditional finance, including analysts at JP Morgan and Bank of America, suggest that the whole scheme is a gamble disguised as an industrial vision. Then, there are the legal matters. In 2024, Saylor agreed to pay $40 million to settle a tax evasion case with Washington, D.C.'s Attorney General Karl Racine, a reputational blow that critics point to as proof of his recklessness. Yet for his supporters, among them well-known figures like Max Kaiser and Michael Novogratz, such accusations are simply the inevitable toll every pioneer must pay when challenging the system. To them, Saylor isn't gambling. He's defending his company's wealth from a currency that loses value every single day.
The Saylor model doesn't remain confined within the walls of strategy. It becomes a wave rippling through global markets. In the summer of 2025, even GameStop, the icon of the Wall Street Bets financial rebellion, announced it was considering adding Bitcoin to its balance sheet. CEO Ryan Cohen, cautious but intrigued, admitted he was closely studying Saylor's approach. Meanwhile, Tesla and Block, Inc., Jack Dorsey's company, continued to hold BTC on their books, reinforcing the narrative of an increasingly tangible wave of institutional adoption. Lesser-known companies such as Marathon Digital and Hut 8 Mining publicly cited Saylor as an inspiration for their own accumulation policies. And while financial giants like Fidelity and BlackRock worked on regulated Bitcoin ETFs, Saylor stayed the course, claiming the advantage of being free from Wall Street's regulatory constraints. Every conference he attends, whether it's Bitcoin 2025 in Miami or the World Economic Forum in Davos, becomes a media event. His remarks are broadcast in real time by CNBC, Bloomberg, and even Elon Musk's X profile. Every word has the potential to move the price of BTC within minutes.
Michael Saylor took a software company and turned it into a fortress of Bitcoin. He didn't just change a business model, he rewrote the very narrative of corporate BTC adoption. He proved, for better or worse, that a single decision, pursued with absolute determination and backed by billions in capital, can shift global balances. To his supporters, he is a visionary on par with figures like Steve Jobs or Elon Musk, not for the products he created, but for his ability to bend the fate of a company to his own vision. To his critics, he is closer to figures like Masayoshi Son of SoftBank, capable of colossal bets, but also of ruinous falls. The line between courage and madness, between vision and gamble, is as thin as a wire suspended over the ocean. Today, Saylor walks that wire, with $76 billion in Bitcoin as his counterweight.
The future will tell whether he will be remembered as the man who safeguarded a company's capital in digital gold, or as the one who pushed his faith in a still young asset too far. But one thing is already certain. Michael Saylor has entered history. And for him, every new block added to the blockchain is another brick in his legend. If you want to stay updated on the most important stories in the crypto world, in Italy and abroad, follow Spazio Crypto. Subscribe to our YouTube channel, turn on the bell, and visit spaziocrypto.com for insights, guides, interviews, and documentaries.